We are now joined by Peter McGuire. He's CEO Exim Australia. Peter, hi. What a complete sell-off that we've seen in metals from the kind of highs that we saw in the month of March and April. The markets were very concerned after the war. Russia is a major producer of many of these metals, but that clearly did not last too long. We did see a surge in markets. We did see a surge in prices. But since then, since the month of April, since those highs, it has been a constant profit-taking that we've seen here. I'll start with aluminium first. And 35% of decline from all-time highs onto this one. What are you watching in sense of fundamentals?
Well, good afternoon, Manisha. I'll tell you what, it's been one-way traffic. It's been anyone that's been short is just rubbing their hands with glee. So, yeah, aluminium, big sell-off, 2,500 down from 3,500. So, you know, you've only got to look at the math. It's just monstrous. And as you mentioned, 30% downtick. I think there's probably a little bit further to go. I wouldn't be surprised maybe a 2,400 handle just in the short run, but yeah, it's there's a lot of hurt there. Great time to be short, and maybe there's going to be some reversals shortly.
Peter, you know, when we look at more than 20% of a decline, we basically call it a bear territory. That's where the metals are trading right now. And if you look at the chart, these are oversold. I mean, in a period of 2 months, we've seen nearly 15 to 35% of a decline in many of these metal prices. But aluminum, as you said, there is further decline expected onto that one. What's your sense on copper as well? Because the markets do believe that as we start paying more attention to renewables by the end of this year, you could be looking at a buying coming in. What is the range that you're looking for that one?
I think, first off, Manisha, copper's got further softness, and I wouldn't be surprised maybe an 87, 8,800. You know, it's been a big sell-off all the way down, and I think that momentum's going to continue over the next month or so. We've got no daybreak as far as Ukraine. We're sitting here just seeing, you know, what's the storyline. There's the inflation story is certainly one of much angst. And now that copper's breached, you know, the 9,000 handle, I think that there's further potential, as I said, to wipe a couple more hundred off it. So, yeah, time to be short at the moment, just continue that downward tick.
All right, you're giving further downward targets here. Also, how are you looking at zinc then? Because with the kind of decline that we've seen in steel, I'm assuming that the galvanizing demand could also be declining.
Absolutely, Manisha, $3,500. So, yeah, it's been a big sell-off. And I think, again, further softness for the zinc market. It's hard to pull a floor. I mean, you know as well as I do, you know, as the old adage, don't catch a falling knife and you'll get cut hands. And that's where it is at the moment. The money's been made on these markets to be short over the last couple of months. And that's why the traders, it's such a, you know, it's just been one-way traffic. It's just been incredible short. So, you know, be careful at these times. You will see a reverse, a little whipsaw. We know that. But at the present time, it looks like, yeah, for a little bit further downside.
Peter, we understand the macros and the major concerns really come in from there. The overall demand could be getting impacted, especially with China's restrictive measures that we've seen in sense of COVID in the last couple of months, which still continue now as well. What is the ex-China, excluding China demand looking like? Because Europe production is still on the lower side for many of these metals. How are you looking at demand outside of China?
Well, as you mentioned, Manisha, the issue is, you know, you've got softness across the Eurozone. We've got inflation running out of control. You've got rates coming up. And you've got Capex spending that's been very soft over the last matter of years for, you know, miners. So once it hits, and there will be that shortfall, and I think that there will be a time that these markets will gallop up again. But at the present time, you've just got to be conscious of the big picture, what's going on with inflation, how the central bank's working in unison, and of course, softness across equity markets, which takes, you know, market sentiment, it just flattens it. So I'm sitting here watching, observing, but there are other markets that have got far more potential in the short run, or when I say that, better trading opportunities.
How are you also looking at the ferrous metals? Because steel margins, demand, prices have continued to decline. As I said, 6-month lows on steel, 3-month lows on iron ore, and the last couple of sessions have seen the decline actually get sharper.
Absolutely. You know, I hear that from the Aussies. They're saying, you know, as far as the mining prices, iron ore has been spanked down, as you mentioned, steel prices. So, again, it's just softness across that whole sector. There's a lot of uncertainty out there, Manisha. This is the great challenge that you've got, the issue with Russia, of course, and Ukraine, inflation, interest rates. You know, it's not a great time, and you've got underinvestment as far as the Capex side of things across a lot of these miners. So, yeah, I think it's a time just to observe the market. A lot of them have been short, and a lot of the traders are sitting on banana chairs, rubbing their hands with glee. Possibly doing yoga, Manisha.
All right. So if you were short on metals is the only way to play it as we've seen it in the last couple of months. Peter, before I let you go, I also want to talk about the precious metals here. And we've seen some buying on the lower side, especially for gold, not so much for silver because that is part industrial metals. And silver clearly has underperformed gold as we've seen in this year, which is, one of those rare years really. But for gold, what is your sense on whether it's a good buying level right now and what are your ranges?
Well, Manisha, I'm conscious of two things. First up, you've got gold sitting around, just can't seem to get out of the groove, and it's sitting there, that 1830, 1840 sort of handle. But US dollar index, it's nudged a little bit lower off that 105 that we saw. It's now sitting at around about 104.20. So I wouldn't be surprised US dollar comes back a little bit. We had those big stories last week. Let's see what a little bit of an adjustment, possibly a 103.50. Gold will edge up a little bit from here, but the inflation story hasn't gone away. There's a lot of fear in the market, and sentiment, I think, overall will be stronger for gold. And keep an eye on silver, Manisha.
Point taken. Thank you so much, Peter, for joining us. So some more decline expected in case of metals. As Peter said, you could be looking at 8,800 in copper, 2,400 perhaps in case of aluminum. So those are deep declines that the markets are anticipating from the current levels as well, where we already are more than 20% down. So it's a bear territory basically in metal prices for the declines expected.